Financial markets are on edge today as key developments unfold across both corporate earnings and global trade. Escalating tensions between the U.S. and China have led to market volatility, with global stocks fluctuating and the U.S. dollar weakening as investors react to the heightened uncertainty. Joining us remotely is Head of Global Content, John Kicklighter. John, thank you for being with us today. So let's look at the week ahead because we had a lot of information coming out from big banks this morning. Then we had the PPI report at, 1:30 London time. But we have also a lot of information coming out next week. So can you give us a breakdown of what is coming on Monday?
Yes. So when we look at the economic calendar for next week, there's going to be a lot scheduled, and it's going to be day by day. I think I would pull out a few high level events. And really, what's important about these events is that they're not going to be your traditional response. It's going to be contextualized because of the market backdrop that you see today. There's volatility, there's heightened uncertainty. There's headlines like China escalating its tariff, it's retaliating against the U.S. and moving up its tariff on U.S. products to 125%. These type of headlines can distract and take us away from the major events, but they can also contextualize the data that we're looking at and change the importance of what we are seeing. So something that might not have been as important previously because it doesn't hit into the global macro flow, it may be now very important because it speaks to trade wars, or vice versa. If it doesn't speak to trade wars, maybe it's a reliable data point that speaks to the just general direction of the market and the economy. And now all of a sudden, it's a second class citizen in terms of market movement. So, um, in terms of the week ahead, I
Mm-hmm.
would say starting with Monday,
Yep.
the thing that I would really focus on is actually that New York Fed inflation expectations figure. And that's because this past week, we had the US CPI release come across the wires, and it was weaker than expected. So there was some reassurance that the Fed can fight any global trade turning into recession concerns because it doesn't have to be as worried about inflation. However, the whole narrative that we get from around the markets is that inflation pressures are rising in anticipation of these tariffs kicking in. Even if it's not tariffs against all the counterparts and all the parties, at least for 90 days, it's still a very significant 10% for pretty evenly distributed. And obviously China, which is going to lead to an inflation. So we want to see what consumers' expectations for inflation are. So that would be the top thing that I'd be watching for, at least on Monday.
And on Tuesday, we've got the Eurozone confidence. So what are we
Mhm.
seeing there?
Yeah. So for Eurozone confidence, and I pluck that one out as being particularly important. And normally, the ZEW's Eurozone confidence figure is not that market moving. I look at it and I toss it to the side. I put it in the context of a global, a global macro outlook for the Eurozone. But far more important now because we had the U-turn on the Eurozone
Yeah.
retaliating against the U.S. for its tariffs, and that is definitely going to put the region on edge because, barring China, the Eurozone is the second largest economy in the world, and how this relationship operates and their consumer is functioning. It has a material impact on the global economy. So that's definitely a highlight for Tuesday for sure.
Well, Wednesday, we've got a big one because we actually have China GDP data coming out, correct? And we
Mhm.
all woke up this morning with 125% tariffs on the
Yes.
US and 145 for China,
Mhm.
retaliatory. So, what are we looking forward to seeing on Wednesday?
So that Chinese GDP is going to get a lot of attention. However, you have to put it in the context. It's going to be a baseline for us. Though we did have tariffs between the U.S. and China starting in around February,
Mhm.
um, it's not really going to play through. There's a lot of people take the Chinese national statistics with a grain of salt, but that grain of salt is going to turn a little bit bigger into a boulder. But you're really seeing the height of escalation now, and that there's massive increases in tariffs, and those tariffs are applied, so it is kicking in. But you won't necessarily see the effect on GDP until theoretically, if you're just looking at this quarterly release, until the next quarter. But if the Chinese economy was already weakening before this started, it's going to have a very heavy impression on expectations go forward. And then we will pay more attention to like the IMF and World Bank. They're doing their spring meetings the week after, and they're going to update their world economic outlook. And China will be very much a focus on those statistics. And we'll also look at more timely updates for expectations there on PMIs. But again, the markets take it with a grain of salt. I would also highlight on Wednesday we have two other events that may be somewhat innocuous or kind of in the background relative to a China GDP. The Bank of Canada rate decision,
Yeah.
not expected to move in the economist consensus. However, amid all this uncertainty, and I think they distinctly said that issues in the U.S. would spill over to impacting their economy. So this is something to see. What is the rest of the world's monetary policy doing in reaction to the world's largest economy engaging in trade wars? And then you also have, after hours, after New York close, the earnings releases of CSX and Alcoa. That's global trade, and that's aluminum. So these will very much talk into tariffs and the specific expectations that these CEOs will give in their investor calls after the fact.
And what about Thursday and Friday? Because Thursday we've got the ECB rate decisions. That's another one that we
Yes,
are all expecting for.
yes. ECB is going to be probably one of the highlights, even though again it's innocuous. If you have trade war headlines are just distracting everybody, but the ECB is a little bit behind in terms of turning dovish or turning hawkish. It's lost in the mix of what the global monetary policy direction is going forward, and they tend to skew more to the dovish. So the markets will be looking to that as releasing some liquidity to the market, hopefully offering some stability. Will that draw capital? I think it will be a more of a salve to encourage expectations of stability than it does to do anything about raising or lowering interest rates that you would expect to get on European assets. People are not as impressed by slightly higher yields. They want stability. So that's going to be an important one. And don't forget, after the close on Thursday, Netflix's earnings. That's going to be the start of our tech earnings, which will definitely get probably more attention than even the bank earnings that we did have today.
And what about Friday?
Friday's a little different. Friday, we have Good Friday, so it's going to be a liquidity drain. Now, normally, I would say, if we didn't have that liquidity drain, we have Chinese fixed direct investment or something along those lines. I would watch that for sure. The rest of the docket is fairly open, and we would expect people bowing out of the markets a little early, maybe even up a Thursday afternoon, evening, cutting out, going to the pub, but. I think that the markets are
Not
going to
going to
be
church, John.
ve
Not going to church. Going to the
yeah, no, no,
pub.
no.
They're all in
Um,
church.
yeah. So on Friday, I think that people are going to keep one eye on the market. And even though exchanges may be closed, there are plenty of markets that were open and they reflect risk trends, even the likes of crypto like Bitcoin. So if any kind of headlines come out over a Friday, a Good Friday, it's still going to move the markets. It's just going to be very difficult because that lack of liquidity, not it will do the opposite of curb market move. It will only exacerbate problems. So if there's any headlines on Friday, be wary. So it's probably a good idea to reduce risk if you're uncomfortable going into Friday.
So do you really think that people are more listening to headlines right now than as opposed to the data that's been coming out and the data that we have coming out next week?
I think people are so disrupted by the uncertainty and the volatility of these headlines. They don't know what to do. So it's best to be cautious and expect that a headline can change the kind of fabric of the
The
markets and how
move,
they
yeah.
respond to things. Yeah, very, very quickly. So keep an eye on headlines, assume that they will be volatile, but also these uncertainties will add context and probably amplitude to some of the outcomes of these major events that we have coming next week.
Thank you, John. I'll check in with you on Monday and see if the China U.S. tariffs are any higher or if maybe something moved. Until then, and thank you guys for watching. For more financial content, please like and subscribe to our channel.